And now to our market monitor, who, like stocks, he says, will be affected by the global economy for years to come. It is his first time joining us for the program. He is Lou Piantedosi, portfolio manager at Eaton Vance, where he manages about $13 billion. Lou, welcome. Nice to have you here.
Thanks for having me.
So tell me how you come to the consensus that you want larger stocks that affect the global economy.
Yeah, I mean, when we look at the environment that we're in, there's so many cross currents, and when it comes to global economies, what's going on in emerging markets, Europe pretty stagnant growth, and the U.S. seems to be in an environment where we're in a kind of a 2 steps up, 1 step back environment. There's lots of uncertainty with the Fed. So in that kind of environment, what we want to seek out is companies that are benefiting from big picture, long-term secular trends. We call them mega trends, and they populate a big part of our focused growth portfolio.
These are, and the stocks, we'll get to them in just a moment, but it feels to me that what you're calling for here in these stock picks are stocks that aren't trading plays, but forever stocks, stocks that would be sort of cornerstones in your portfolio.
That's right. We view these companies as long-term franchises. These are the types of stocks that you don't want to trade. That's correct. They are buy and hold, invest, build wealth over time type of stocks. You know, really, we haven't seen a strong growth cycle since the period of the 90s, and we think there's a lot of parallels to what happened during that period of the 90s to where we are today, and that huge mega trends, transformational trends are taking place and kind of flying under the radar, and investors are missing it because they're much more involved in thinking about the macro in trading positions rather than investing in these companies.
So let's get to the stock picks, and we'll start out with Facebook. It's trading at about $102 a share. Why do you like it?
Yeah, Facebook is a company when I talk about, and I've been talking about this one for a couple of years now, when I talk about it today, people say I missed the stock. And my argument is you haven't missed anything. They'll likely end this year with about $17 billion in revenues, which is pretty remarkable considering the company really wasn't in existence 10 years ago. But as we look at that revenue base, that's still less than 3% share of the $700 billion global advertising market. So they're growing rapidly, but we still think that they have the opportunity to double and even triple that share over the next 3, 4, 5 years.
Let's go on to choice number 2, which is a stock I've heard of. It's called Amazon. Why do you love it?
Well, again, Amazon. We love Amazon because it has a major presence in 2 huge secular trends. That first trend, e-commerce. Everyone knows Amazon is a retailer. Online retail or e-commerce is growing 5 times traditional retail, and Amazon's place within that e-commerce space continues to gain share. So we love Amazon as an e-commerce play, but we also love it through Amazon Web Services and the shift to the cloud. This is a business that they've given more clarity to recently, and the growth in that business is remarkable. They're a leading player, but it's still in the very early stages.
And we'll finish up with Gilead. And you say the business is misunderstood by Wall Street. How so?
Yeah, I think their drug for Hep C has been nothing short of remarkable, and it's a remarkable drug in that it actually cures the disease. To date, they've cured 600,000 patients in the United States alone. And I think the street thinks that that number has peaked, or their earnings have peaked over time. But we look at that total addressable market and see 3 to 4 million patients in the United States, an additional 2.5 million in continental Europe, and then another million or so in Japan that they're just starting to crack the surface on. So there's lots of growth in this company going forward.
Very quick closing question. Do you think the S&P 500 will be higher at the end of the year than it is now? And if so, by roughly how much?
You know, that's not my game to call the market. We focus on companies and the best growth companies that we can find. The companies that I mentioned all have earnings growth in excess of the market, and if they can continue to do what we think they can, those companies will perform very, very well.
Good stock
the
picker's
S&P is
answer,
made up
Lou.
of a lot of different. Thank you.
Lou, thanks for joining us. We'll talk to you soon.
Great, my pleasure.
Lou Piantedosi with Eaton Vance.